The session up about 8 or so points. Your thoughts on it in general?
Really not too much happening on our market. Our market up by about 0.2%, but once again, light volumes, $3.2 billion worth of stock being traded today. And with China on holidays around the region, there wasn't too much happening in terms of volumes over here domestically. There was, however, a lot happening in terms of domestic macro data. We did see the building approval numbers down by 5.7% in August, and also the trade deficit, which was double what the market expected. So a big reaction in terms of the Aussie dollar. In fact, just having a look at the Aussie dollar during the session, and this is what it looks like. You can see when the numbers came out, we did see significant weakness coming in on the Aussie dollar. Some individual stock moves were quite interesting, though. We did see G8 Education as well as Aristocrat Leisure reaching all-time record highs or 52-week highs. But on the flip side, some stocks not doing too well. Oriton all week has been making 52-week lows, and it's continued to do so today, as well as Discovery Metals. And of course, the commodity space, gold prices down 3.1% overnight, copper prices down by 1.5%. And we were also watching what was happening in Japan as well. That consumption tax is a massive deal. The tax hike from 5% up to 9%. It's the first hike that was seen since 1997. So the fact that we are seeing such a big tax hike at a time when the Japanese recovery is still extremely fragile, I think has the markets quite nervous. Not only that, the stimulus is supposed to offset it, but we haven't heard a huge amount of details there as well. So you can just imagine the impact that would have on consumer spending and growth in Australia if we saw GST rising by that amount. So I guess just watching Japan and the Japanese market and but I think really the markets over here domestically in Australia are asleep today.
Any upside to the gold price, especially considering, as both Michael and John mentioned, some of these macro issues you'd think would see a move into gold?
Absolutely. The move overnight was very difficult to explain. I mean, this is a perfect environment for gold. You're seeing ongoing quantitative easing coming out of the US, and this is a no-taper environment with the instability that we are seeing in terms of the US government and the shutdown. Usually gold is a safe haven, and to add into the mix, you've seen US dollar weakness overnight, and generally that's a positive for commodities which are traded in US dollar terms. So US dollar weakness usually means a positive performance for commodities, but gold prices, they drop like a stone, down by 3.1% overnight, and that's a key reason why the Australian market underperformed the US, the fall that we saw in commodity prices, and that's because the material sector is such a big weight on our market. It makes up 17% of the benchmark ASX 200 index. It's the second largest sector following the financial space, which makes up 36% of our market. And if we have a look at the gold space, while it's a very small part of the material space, making up about 6% of that sector, if you have a look at the worst performers on our market, they did come from the gold space. So in the material space, if you have a look at the top three worst performers, Resolute Mining, you also saw Newcrest Mining, as well as Bidell, they were all gold stocks. So gold stocks certainly under the pump today. The material sector also underperforming, and that had a negative impact in terms of the Australian market compared to the US overnight. But really difficult to explain that move in gold, because this is a perfect environment for gold.
Mike, anything?
The market has been incredibly resilient in the face of the problems that we're seeing in the US and the shutdown, and the numbers which have been weaker than expected coming out of China, as well as the problems in terms of Italy's political situation. So given that backdrop, the Aussie market has managed to stay above 5,200 points, which is a key psychological mark for our market, and all we're seeing is a little bit of consolidation between the 5,200 and the 5,300 point levels to psychological levels. So technically we're seeing a little bit of consolidation, but I think it's a healthy pause for our market, and the fact that we've stayed above 5,200 points while all this is happening is actually a pretty positive sign for the Aussie share market. So just watching it and monitoring it quite carefully, but usually when we drift sideways, it's a drift sideways and down. We haven't seen a huge amount of down movement this time around.